All right, what's going on, guys? In this video, I'm going to be going over my manipulation model. Now, this is an entry model that I have designed. I've used a couple of different models and then kind of added my own twist to it. This is by far the most profitable entry model that I've found. Any asset you can trade this with. So whether you're trading NASDAQ, whether you're trading crypto, whether you're trading stocks, whether you're trading forex, this entry model can be used. So I'm going to go through it step by step. It's not super complicated and it makes a lot of sense. So without further ado, let's jump into it. All right, so here is how this model looks like in action. This is a trade taken on NQ. The setup just occurred around an hour ago, perfectly following all of these steps in the manipulation model. So in short, what this entry model is a sweep of liquidity into an inverse fair value gap. Okay, that is in very, very simple terms what this entry model is. Now, I know you're thinking, well, how does this differ from, just your standard IFVG trading strategy? And there's a few things that I watch for before I enter this trade to confirm that this will actually go in the direction that I am expecting it to go, right? Because a lot of times you'll see if you were to just trade every single IFVG that you get, a lot of them don't play out in your favor. So there's two things we need to see mainly before we can enter this inverse fair value gap to confirm that this whole move right here is manipulation, hence the term manipulation model, and that we will now distribute back to the upside. Okay, the first thing, like I said, is a sweep of liquidity, okay? Preferably a higher time frame liquidity level, meaning, I'm not just gonna be looking for a sweep of this most recent low here, within 5 candles. I want to see a higher time frame low, structure lows is what I refer these to, get swept, meaning I want to see price close below these lows, kind of consolidate a little bit, and then reclaim these lows with an inverse fair value gap. Now, it's very important when you're trading this model, this entry model right here, this candle closure that closes above this bearish fair value gap, creating an inverse fair value gap, has to be above these two lows. So I need to see a sweep and reclaim of these lows along with the inverse fair value gap. And then my final piece of confirmation is going to be momentum. I don't see that many people on YouTube, on Instagram, on TikTok talking about momentum and how important it is. For some reason, trading indicators tend to get a lot of hate, which I really don't understand, because if you have a tested and proven system or a tested and proven strategy, why would you not want to automate at least some of that process? That's how I look at it as someone who's been building indicators for almost 4 years now, actually around 3.5 years now. In my opinion, in my experience trading, keep in mind, I've been trading the market since 2017. Momentum is by far the most helpful piece of confluence that I use in my day-to-day trading. Now, keep in mind, I trade cryptocurrency mainly. I'm getting into NASDAQ trading now with this entry model because it's so good. But this can work across, any asset. So, most people get momentum wrong, right? Because they're looking at this chart, keep in mind, I'm on a 1 minute time frame. So this is a lower time frame entry model, 1 to 5 minute time frame. People will be looking at this chart and saying, well, none of these bearish divergences on your momentum oscillator are playing out, right? We see bearish div, we go down a little bit, and then we continue up, bearish div, go down a little bit. And then we, finally we get this bearish divergence, and price goes down, because you need to have context before getting into your trade. The reason I was looking to take a long here, because structure on a higher time frame is clearly bullish. And just to confirm your bias, if you guys are ever wondering, well, what is my bias today? Look at the EMAs. Just pull up a 20 and a 50 EMA, go to like a 15-minute time frame. Okay, are these EMAs trending to the upside? Yes. We were also rebalancing this fair value gap right here. So we tapped into a higher time frame fair value gap. So that is what I mean by, you need some context in confluence with your momentum. But I mean, that's very, very simple to understand, whether you're in an uptrend or whether you're in a downtrend. So here's my 15-minute fair value gap. I have these structure lows here that I'm waiting to get swept. Structure is clearly bullish, right? We're displacing to the upside, higher highs and higher lows. This is my final piece of confluence that I look for to confirm the manipulation model, okay? And that is an oversold dot on my oscillator or a bullish divergence. A bullish divergence is going to be the best, because what this is showing us here is on this move down from this low right here with this big momentum wave to this low, momentum was actually increasing to the upside. So think of this as like a volleyball, holding a volleyball underwater, right? Price and momentum are doing the opposite. For example, price is making a lower low as momentum is making a higher low. This is like that volleyball underwater analogy where, there's so much pressure building up that all it takes is one bullish candle, one inverse fair value gap, right? And then it will explode to the upside. This can be the make or break it between, an IFVG that actually plays out, or an IFEG that doesn't play out because momentum is still trending to the downside. But because we confirm that we have bullish divergences, we can see the volumes increasing. This is a valid setup. If you guys are wondering what momentum indicator I'm using down here, this is my own custom algorithm, okay, called the Easy Oscillator within the EzAlgo bundle. That's going to be the first link in the description below if you guys want to get access to this indicator for yourself. Keep in mind, this is a paid indicator, but the good thing about this indicator is that it's non-repaint. So a lot of momentum indicators that you may find on TradingView, like, RSI, for example, which is very, very laggy. Fu Manchu Cipher B is another free one. It's actually a repaint divergence indicator as well. So I've just coded a real-time momentum indicator that is non-repaint. It's all real-time. So that's going to be the first link in the description below. This is an A+ setup using this manipulation model. Now, again, if you guys want to incorporate some other pieces of Confluence as well, I'm a big advocate for the golden pocket fib, just confirming that you are buying in discount, which obviously we are. Also, for my breakout and retest traders, this was also a breakout and retest of this major structure high right here. You can see this was resistance. We'd broken out and we just came down to retest this high. This is why I say it doesn't really matter what your trading strategy or system is. It's all price action at the end of the day. Price action is simply price action. So this was just a really good setup all around. Now you want to move your stop loss to break even at the most recent structure high getting ran. So right here, you would move your stop loss to break even. You would lock in this trade. And also you would lock in a partial take profit here at the 50% level of this bearish fair value gap. Now this entry model works best when you have an equal high or an equal low to target. But if we were to see something like this, where we had one high and a second high that's slightly lower than that first high, this would be a really good setup because liquidity moves price, and anytime there's an equal high or an equal low, it usually indicates that price will gravitate towards those levels to take out those open orders. This would be an example of an equal low right here. So as price is, going up and up, we are expecting at some point for price to come back down and take out these equal lows because this is where the liquidity lies. And then that will give us our really good entry here with this inverse fair value gap. Now, for a textbook inverse fair value gap, you want to see this move play out within like 5 to 10 candles. So you can see we have a bearish fair value gap, a very obvious bearish fair value gap, right? This isn't like a tiny little fair value gap. This is a very clear, bearish move to the downside, creating that gap. That's what we want to look for. And then we want to see price kind of consolidate and inverse that pretty quickly. Meaning, if price were to do something like this and, chop around for like hours and hours and hours, I probably wouldn't take this trade. I want to see that instant kind of V reversal move back up, which is why I like to call this model the manipulation model, because quite literally all this price action is right here. This consolidation is just manipulation. It's just taking out these open orders, tagging into our higher time frame fair value gap, retesting previous structures. Momentum is clearly oversold. We're getting ready for a move back up, and then we continue to the upside. So this move is manipulation right here. So you want to look for moves like this where it's a sharp move down and then a pretty instant reversal back to the upside, or a V-shaped reversal is what we call it. So our goal using this method is to catch the entry of that V-shaped reversal as soon as we are seeing some confirmations that this bearish order flow is now shifting to bullish. I know this is sounding like a lot right now. I know some of you guys are probably really confused with some of the terminology that I'm using. Don't get too caught up in the words. Just study this model, right? Study this price action here. And it's pretty simple, right? All you're looking for, and I'll draw it out to make it very clear. Let's say you have an uptrending market, right? Your bias is bullish. You're seeing higher highs and higher lows, something like this. Maybe you make an equal low right here, right? And price comes back down to take out these lows. You are catching this move up right here. This is the move up that you're catching. And you're catching this move by waiting for a sweep, right? A sweep of these lows, which you get right here, sweep of liquidity, and then an inverse fair value gap, right? So maybe there's a bearish fair value gap right here. You're waiting for a 1 minute candle closure above this bearish fair value gap, and that is going to be your long trigger, stop loss below this low, targeting higher prices, moving stop loss to break even as soon as a previous high gets ran. So probably around here or here, you'd move your stop loss to break even, depending on the setup. And like I said, this can work across any asset. So I'll show you guys another example here. This was actually a Bitcoin scalp long that I called in real time inside the Pro Discord. I actually called both of these trades. So we called a scalp short earlier today, right around here at the golden pocket. Took TP1. This short is still running, stop loss to break even. And then we took this scalp long here. Now, again, if you wanted to enter this trade using my manipulation model, it's very, very simple. Again, we have multiple sweeps of liquidity here, right? Sweep of one low right here, sweep of another low right here, tagging into our local golden pocket, retesting these previous structure highs. And all we're waiting for now is an inverse fair value gap at this level. So we can see we get a bearish fair value gap right here, and price inverses this bearish fair value gap, closing above on the 1 minute time frame. And we have those bullish divergences, meaning from this low right here to this low right here, momentum is increasing to the upside. This is going to be your bullish divergence, confirming that this move is manipulation. Stop loss to break even right here. And by the way, I updated this in real time inside the Pro Discord. Again, it's going to be the first link in the description below. TP1 at this high right here. Okay, so as you can see, just for some more proof, this is what I'm posting in real time inside the Discord, just in case you guys want to follow my own personal calls. But I'm showing you guys in real time how this model works, entering on a 1 minute time frame. Again, this works best on a 1 to 5 minute time frame. Now, I am developing an algorithm based on this model in specific, incorporating sweeps, incorporating momentum, and incorporating inverse fair value gaps. If you guys want to get access to when I release this algorithm, so everything I've just showed you in this video will be done completely automatic, then make sure to join the free Discord. There will be a link somewhere in the description below, or you can go to discord.gg/EzTrades. It is going to be a complete game changer. Well, that is going to be it for this video. I hope you guys found some value. Again, make sure to join the free Discord in the description below to get notified for when I release this new algorithm, and click the first link in the description below if you guys want to learn from myself directly. Make sure to leave a like on this video, comment down below if I've helped you guys out, subscribe to the channel for more trading content, and I'll see you guys next video.